The United States is facing an unprecedented level of debt over $37 trillion, far beyond anything any nation has ever experienced. Traditional solutions like raising taxes, cutting spending, or relying solely on economic growth simply won't work. The truth is, the government has a more sophisticated plan. They were not planning to pay this debt, they were planning to reduce it indirectly through a strategy that quietly devalues the dollar, while revaluing strategic assets like gold and cryptocurrency. Most Americans don't realize this because the method is hidden in plain sight, appearing as standard fiscal and monetary policy. Governments have a unique advantage that households and businesses don't. They control the currency. When a government controls the currency, it can redefine the value of money itself. This allows them to reduce the real burden of debt without defaulting. History shows us this isn't new. In 1933, during the Great Depression, the U.S. government revalued gold, effectively creating new value on their balance sheet. Citizens who had surrendered gold to the government received dollars that would lose purchasing power over time, while the government erased a large portion of its debt. The principle is simple. Assets they hold become worth more, the currency becomes worth less, and the debt burden decreases without anyone realizing the full impact until it is too late. Today, the U.S. government is using the same principle, but with more modern tools. Bitcoin and gold are central to this strategy. Recently, executive orders and legislative proposals have laid the groundwork for a strategic Bitcoin reserve, similar to the Strategic Petroleum Reserve, allowing the Treasury to quietly accumulate Bitcoin from various sources, seizures, fines, and government mining operations. The aim isn't to buy it on the open market at current prices, which would spike costs, but to collect it strategically before a future revaluation. When the U.S. revalues Bitcoin on its balance sheet, its value will multiply, creating billions in accounting gains that reduce the apparent debt burden. Gold plays a similar role. The U.S. holds over 8,100 tons of gold, officially valued far below current market prices. By revaluing gold on the government balance sheet, they can instantly create trillions in new value without physically acquiring more. This revaluation strengthens the government's balance sheet and reduces the real debt-to-GDP ratio, while every dollar held by citizens quietly loses value. The mechanism is subtle but devastating. While crypto and gold rise, the purchasing power of everyday Americans' savings declines. Inflation accelerates, food, energy, and housing costs rise, and fixed income earners feel the impact immediately. The timeline for this strategy is already visible. The accumulation phase is underway. Bitcoin is being gathered quietly, and gold-backed narratives are being strengthened in public discourse. The next phase is a financial or economic crisis phase where market stress justifies extraordinary measures, giving the government the opportunity to implement revaluation without backlash. Finally, in the revaluation phase, Bitcoin and gold are officially repriced. The dollar falls, inflation surges, and the government achieves its goal, reducing a $37 trillion debt to a far more manageable figure in real terms. This isn't theoretical. Countries have done similar maneuvers multiple times. Germany in the 1920s, Argentina, Zimbabwe, and Venezuela all used currency devaluation to erase debt burdens, often at the cost of middle-class savings and real wages. The pattern is clear. Governments survive, creditors and savers lose, and social inequality intensifies. The U.S. strategy is the modern, sophisticated iteration of this historical precedent. What does this mean for individuals? First, dollar-denominated assets are at risk. Bonds, savings accounts, and cash holdings lose purchasing power quickly during such resets. Second, hard assets like physical gold, productive real estate, and commodities retain value. Bitcoin, though volatile, offers potential for massive upside if timed correctly. Third, debt management becomes critical. While theoretically, debt repaid in devalued dollars could be advantageous, income often does not keep pace with inflation, so fixed obligations in dollars can become burdensome. Reducing high-interest personal debt remains a priority. Diversification across international currencies and assets is also essential. Countries with stable economies and low debt, along with strong legal and banking systems, can serve as a safe harbor for savings. Skills, relationships, and community connections matter more than ever. In times of currency devaluation, the ability to produce value locally can protect individuals and families from economic collapse. The evidence is mounting that the world is preparing for a coordinated monetary reset. BRICS nations are accumulating gold, China is positioning Bitcoin strategically, and central banks worldwide are increasing hard asset reserves. The US is following this playbook, not alone, but in alignment with global trends. For Americans, awareness and proactive positioning are critical. In practical terms, the steps to protect yourself involve 3 layers. First, reduce exposure to dollar-denominated assets and increase holdings in gold, Bitcoin, real estate, and commodities. Second, pay off vulnerable debts and secure fixed-rate obligations. Third, diversify internationally and build skills and relationships that generate value beyond currency. History shows that survival during currency resets favors those who act before the revaluation occurs. This reset is not a conspiracy, it is visible policy. The executive orders, legislative proposals, and public narratives around strategic reserves are all pieces of the puzzle. Americans have a short window to respond as the phases of accumulation, crisis, and revaluation are unfolding over the next 2 to 3 years. Awareness, preparation, and diversification are essential to survive and even thrive during the coming economic shift. The U.S. government's plan to use crypto and gold to manage its $37 trillion debt is complex, but the outcome is simple: debt reduction without direct repayment and a quiet transfer of wealth from ordinary citizens to the state and strategic asset holders. By understanding the mechanics, following the timeline, and positioning assets intelligently, you can protect your wealth, maintain purchasing power, and navigate the reset successfully. This is the reality of modern fiscal strategy: sophisticated, legal, and largely invisible to the public. Being informed and taking decisive action now is the difference between preserving your financial future or losing decades of savings to an unavoidable currency reset.